Bitcoin continues to play a significant role in the economies of several countries. Some have even done so much as adapt them as an official currency. Greg Foss, Executive Director at Strategic Initiatives, explained how beneficial Bitcoin can be to the US economy. Make sure you stick around to the end of the video to further understand the benefits of Bitcoin.
You've seen some crazy announcement out of the Bank of Japan today, for example. It reminds me of my time in the Great Financial Crisis, when every single day you had some sort of talking head from the finance circles, whether it was the head of Lehman or the head of Bear Stearns. Oh, don't worry, everything is just fine. Nothing to see here. As soon as the talking heads start saying stuff like that, you know that there's some approaching flames, and a little bit nervous. I'll be very clear that this is not grade 11 math from the perspective of sitting in a risk chair, okay? Trading credit default swaps is a very specific business. It's confined to the largest funds in the world. You need what's called an ISDA, an International Swaps Dealers Association accreditation. It's done between hedge funds and banks and large asset managers. It's not for the little guy, but I use the CDS markets, the credit default swap markets on sovereign debt, to provide a valuation matrix for Bitcoin. It's done through a credit lens, Nat, because that's where my experience has been. I spent my entire career in credit markets, as you know, so I always start an analysis with a credit perspective. So really quickly, and I did send out a tweet, I like to think of Bitcoin as essentially a credit default swap on a basket of fiat currencies. And that is to say that you are buying insurance on the potential default of some of the currencies in that basket. Now, as we know, there have been regular defaults that have happened within particularly emerging market economies. For example, I've said that in my career, Argentina has defaulted 4 times. Well, Argentina is a G20 country. I have yet to experience the formal default of a G7 country, but I believe that is probably coming as well. To line up how I value Bitcoin as an insurance policy on these baskets of currencies, look at the current 5-year default swap rate on USA, and that's 20 basis points, which means that it costs you $20,000 a year to insure $10 million of debt on the USA against default. Now, many people say, why in the world would you buy protection on the USA if they can just print money and solve a default by printing more money? And the truth is, that is an excuse. Nonetheless, people still do it. I'm not going to argue with the market. The market is 20 basis points, which means people are paying that premium. Why are they paying that premium? Because they obviously think there's a greater than 0 chance the USA can default. If you look through the list of tradable sovereign credits, you'll notice that some of them, like Italy, are much higher than 20 basis points, and some of them, like Turkey, are substantially higher than 20 basis points, because people would not argue that the probability of defaults of those countries are higher than the USA. But I just looked at the USA, and it's 20 basis points, and I adjust it from a 5-year tenor to a 20-year tenor. So 4 basis points a year means that over 20 years, for a period of 20 years, I estimate that the USA would be worth 80 basis points. If anyone was to sell insurance, they would get 80 basis points on that contract. And then I just take the outstanding debt of the United States, which is 30 trillion of funded debt, and another 170 trillion. I actually made an error. Someone pointed it out in my calculation. I used 160 trillion. It's actually now up to 170 trillion. So in total, Nat, there's 170 trillion plus 30 trillion, 200 trillion of USA obligations out there. And I just multiply 80 basis points by that. 200 trillion, and you come up with $1.6 trillion is essentially how much default protection would be worth on the entire USA. Now, funny thing is, Bitcoin only trades for 375 billion. So if my thesis was correct, and I'm not saying it is, it's just the way I like to look at it, you're getting default protection on the USA for less than 1/3 of the value, and you're getting all the other nations in the world for free. And I think a lot of people would agree with me that the chances of other nations defaulting before the USA is substantially higher. So I like to get stuff for free and only pay 1/3 the price for the USA. It was my way of saying, my God, Bitcoin is undervalued.
Japan, that's something you've been focusing on. Greg, can you provide an update on what's going on with the bond market there? Maybe we'll start with that.
Well, it's hard to say what's happening with the bond market because it's so manipulated. The yield curve control, the desire to keep the 10-year rate at 25 basis points has hit some bumps, but it's all guns blazing. The bigger concern that I had was when the Bank of Japan, one of the governors came out today, I can't remember who it was, and basically said, it's all fine, as I mentioned earlier. Well, chances are it's not all fine. And why is that? Because Yellen very quickly thereafter went on tape saying, oh, the USA and Japan are going to explore all ways of controlling the yen and keeping things stable, if you will. That's just another way of doing quantitative easing that Bernanke said many years ago that the way the USA could invoke quantitative easing is by participating in foreign countries' debt markets. Well, it looks to me like they are potentially going to invoke quantitative easing in Japan as some backdoor methodology of employing QE across the world, just not in the USA's debt markets. And here's the funny thing, Preston Pysh jumped on this immediately, and he basically sent out, oh, okay, so that's what the US taxpayer money is going to be used for. Is it to support the bond market in Japan at manipulated below market rates? So what a bit of a circular logic, a bit of a cesspool of old banker thinking, but yeah, it's not pretty.
And I know you mentioned Japan implementing yield curve controls. Can you just explain for the audience what that really means? And could we see that here in the US?
Absolutely. An economist that I'm very fond of, Luke Groman, believes that yield curve control is the only way we can escape the debt spiral in the USA. What yield curve control is basically the central bank pegging a rate somewhere along the yield curve. Let's take Japan's case where it's at a rate of 25 basis points. They basically say they will buy all the bonds that are for sale at 25 basis points. There's a price at which they will put a stake in the ground that anybody in the world, including hedge funds that are shorting the debt to them, they will buy all that debt at 25 basis points. And it's a way of pegging a point in their yield curve to try and control the shape of the overall yield curve, but most importantly, to keep the base level of interest rates locked at 25 basis points. Luke Groman thinks that that's the only way the USA escapes the current debt spiral, by employing yield curve control in the USA and allowing inflation to actually run hot so that your GDP, your tax base grows at the rate of inflation, but your yield curve and your nominal rate on your yield curve is below the rate of inflation. It's basically the IMF financial repression methodology of reducing the debt spiral. It's not good for bondholders. It's horrible for the currency. It's the reason that you need hard money, hence the name of your show. It's the reason you need Bitcoin.
What did you think of the analysis given by Greg Foss? Do you believe that Bitcoin is as beneficial to the economy? Give us your thoughts on this in the comment section down below. If you enjoyed this video, kindly like and subscribe, and we'll catch you on the next one.